commissions today. If you didn't know that, time to leave. So what are commissions and who are commissions for? That's really the core of kind of all of the questions about any sort of commission work that you would do. Typically and kind of historically, commissions are for salespeople, and they represent a portion of a sale or a deal. It's a profit-sharing mechanism. But nowadays, more and more people are realizing that commissions can be a good motivational tool for a wide variety of people. So there's gamification's kind of a version of it, but maybe you have support people that are working on build timesheets and things like that that you might want to pay commission for. So when you're setting up your kind of, either you're setting up a new commission kind of structure for yourself and your company, or if you're going to try to improve your own, there's a lot of different kind of considerations that you'll want to make, such as, do you pay based on the total of an invoice that's confirmed? Do you pay maybe only when the invoice is paid versus when the invoice is confirmed? Do you have admin personnel that maybe are responsible for taking over after a sale has been made, but they need to walk the sale order through various steps and they're part of the sales process, so they're encouraged to be commissioned? Maybe you have some build on timesheet kind of users that you want to have a convenient profit sharing mechanism with. So a lot of things to consider just from starting it out. When you're already managing your commissions, there's typically the Excel way, right? It's a very painful. Physically, there's a lot of copy and pasting because you need to take data from one place to another. Maybe you need to provide duplicates of your reports to your employees or to your payroll providers. If your employees can't have easy access to audit their own commissions, then you're probably going to hear a lot of questions from them about what the state of their commissions are. And ultimately, if you've got all your commissions in a single Excel sheet or something, then you, as a manager, are going to have to do a little bit of work to extract that out to be able to even provide that reporting to your employees. There is, of course, a better way how Hibou manages commissions. So let's go ahead and get into the demonstration part. So normally we would be setting up a new employee and a new contract and stuff, but I thought we'd do things a little bit differently this time. And what we'll do instead is we'll go and look at some of our employees that we've conveniently tagged with commissions. Let's start off with Theodore here. When we look at the contract for Theodore, we'll see that we have a commission percent right here on the contract. Therefore, if Theodore here is the salesperson on a sale order, which gets copied over to the salesperson on an invoice, then 3% of some setup is going to be added for Theodore. I probably should have gone through the setup first, but I guess I'll do things a little out of order. If we look at one of our other employees here, Hedwig, we'll see that this employee has the same thing, essentially. So that wasn't such a great employee to look at. But the last one here, Finn, will be a little more interesting. So let's look at Finn. And we'll see that Finn has 0% in commissions, which essentially means that if Finn is the salesperson on a sale order, he's not going to get any commission. It's kind of unlikely, but the scenario here that we're trying to do is if Finn is essentially the coach of the employee, then Finn will get 1% of admin commissions automatically when that other employee makes a sale. This is a very typical mechanism for either a hierarchy or for that admin role where an admin takes over and is responsible for some sort of sales team or something like that to be able to get the commissions done. Additionally, Finn here has a commissioned timesheets for 2% as well. So everybody remember that because we're going to be playing a little game later. But let's look at settings to look at what we have for commissions. So if we type in commissions up here. We'll get to the commission setup for our module. We have a journal, which of course is where we're going to record the commissions. So you'll invoice in your invoicing journal. When you confirm the invoice, then a entry will be made. Well, when you confirm or when you pay an invoice, a entry will be put into the commissions journal, and it will use the accounting there. We have a liability account. You don't have to set the liability account. If you don't, it'll essentially use the AP or the accounts payable off of the partner for the employee record. We have some settings that I alluded to earlier, which is when we pay our commission or when we recognize the liability of the commission, which is either on invoice validation or on invoice paid. Generally speaking, invoice paid is a stronger control and stronger motivator for the company to set up the right kind of deals, because a lot of times salespeople might go out and make deals that aren't great, and if they don't get paid, then they shouldn't get their commission either. How about the base of the invoice, right? We can work on the invoice total tax excluded, or again, the kind of gold standard, if you will, on invoice margin. And we have a field here, which is our base minimum margin threshold, which essentially makes it such that if we're selling a product that is below this margin threshold, then we will not get a commission for it effectively. And if you have a kind of blend of products on your invoice, then you're only going to get commission for the products that had a margin that was higher than the base margin. So that's all the data you need to know, right? We memorized everything about the employee setup, right? We're going to play a little game called Predict How Many Commissions We Get and what it's based on. So let's go over into invoicing. And we will create a new invoice. Doesn't matter who. We're going to add a product here called the Gold Cake. You'll note that the Gold Cake has a cost of $3,000, and thus we have a margin calculation here that gives it a even 50% margin. Let's go ahead and go to the Other Information tab, and we'll set up one of our agents as the selling agent. So let's set Hedwig. All right, is everybody ready? How many commissions are we going to get? And what's the base? Let's go ahead and confirm it. And we will see, hopefully everybody had this one right, 1 commission, and the base is the $3,000, right? So if we look at that commission, we'll see a variety of things on it that are informational. The employee can get to this record, which is very useful for them to be able to self-audit and report and things. You'll see that the rate type is normal. We pulled the contract that had the original 7%. We pulled the rate for the 7%. We pulled the base, which in this case is the margin, and we calculated the commission that we're going to be paying for them. Now, we have it set up such that this is a new commission. It's a blue line, new line. It hasn't generated an account entry, meaning that we haven't recognized this commission as something that we're going to be paying yet. But you'll note if we come back out here and we register payment, then our commission will automatically be confirmed. And at this point, it has created a journal entry that recognizes the commission liability for your employee's purpose, right? All right, let's go ahead and duplicate that invoice. And we're going to change the salesperson to Theodore. All right, everybody ready? How many commissions? What's the base? 2 commissions this time. So why is ultimately because Finn is the coach of Theodore. So when we made a sale for Theodore, or we made an invoice in this case, then we immediately made a commission for Finn as the admin. And thus, if we look at Finn's new commission here, we're going to get a different rate type, and it pulled the rate from a different place. The base and the amount and stuff makes sense from there on out, right? Let's do it again. Let's duplicate this one. And we're going to go over to our other info, and we'll choose Ella. Now, some of you might remember that Ella didn't have commissions set up, so we're kind of curious as to what might happen here. Let's confirm. And in fact, we get 1 commission, but it's not for Ella. It's the same as the last time. It's basically that Finn is the admin for Ella, and despite Ella not being eligible for getting commission, Finn is, and so Finn got the commission for the order that he was responsible for some participation in. All right, things are going to get a little more interesting now. This time we're going to choose a partner called Peter Reeves. And let's go ahead and add the same gold cake. All right, so we have the same margin. We have a different partner. Spoiler alert, it won't really matter who we choose here, but let's choose Ella. And save it. Oh, confirm it. 3 commissions. Did anybody have 3 commissions? All right. So this one is going to be an interesting one because this is based on what we call a commission structure that partner had assigned to them. So let's go ahead and go. And we can take a look here, and we'll see that the rate type is a structure. Let's go ahead and see where we would configure that on a partner. If we go to the customer, we can come over to accounting, and underneath the accounts payable, we see a commission structure. The commission structure overrides the salesperson on the invoice, and you can think of this as like being a distribution for maybe a historic customer or something that came in, or that in this case, Miley, for example, is responsible for onboarding this customer or something like that. And so every time we make a new sale for this person, this set of employees, if you will, gets this. Keep in mind that this is very commonly used for external agents. You would still set them up as an employee. They wouldn't be a traditional employee or in the US, but the setup would be the same to be able to record the liabilities and all that kind of stuff. All right. Hopefully everybody's doing all right on this. But let's go ahead and find a prior invoice here and duplicate this one. Actually, yeah, action duplicate. All right, let's go ahead and set our salesperson here to be Hedwig. All right, so this one's going to be potentially a tricky one. So study it for just a second here. We've got a margin down here. What's going to be, how many commissions, and what is the base? Let's go ahead and hit confirm. It's 1 commission, but it's not going to be for the margin of 34 or 70. And in fact, the base is only 3,000. Why? Well, I mean, if we study it long enough, we can kind of deduce it. But at the end of the day, it's this big chocolate distribution here does not have the minimum margin requirements. So despite this line being substantially sized, it didn't actually impact our commissions that we were going to paying out because there's very little margin on that particular order. All right, I have one more. All right, so here we have a sale order, and the sale order has timesheets. So when we create the invoice for this, and we go ahead and confirm this invoice, we will get a commission entry. We didn't. Oh, yeah, we did. Okay. We will get a commission entry, in this case for Finn. And again, if we click on it, we will see the configuration is that we were based on timesheets. Now, keep in mind that this isn't just based on the timesheets. It's based on the timesheets that Finn actually contributed to the sale order. So if you have a wide variety of timesheets, obviously going into a single invoice, it's going to be broken up based on the individual's contributions for how that distributes out to everybody. So how did everybody do? Everybody was able to predict that? Or maybe they had Excel out and they got it programmed in real fast? All right, so let's go ahead and look at our commissions. We have a whole bunch of commissions. Again, this is visible to the end user as a reporting tool. We have graphs and things like that for it. But let's go ahead and filter to just the confirmed commissions right now. We'll mass select them, and it's the time of the month where we're going to go ahead and take this commission and pay it out. We're going to either remit it to our payroll provider, or as we'll see, we'll just pay it through payroll ourselves. So we'll mark paid, and we will be redirected over to a list of what we call commission payments, which if you are extracting data out to your payroll provider, this is going to be your summary report, right? So these are going to be summaries of all the commission objects that are being marked paid and what the source move or the invoice was for them. And it has a very convenient amount here, and obviously it's linked to the employee, which therefore makes it very easy to export and take it over to an external system to say that this is how much you're actually going to be remitting for the individuals. We have this report index payslip here, and we're going to use it. I'm going to use it in mass, though. So with all of these marked for payslips, it's time for us to go over into our payroll and easily pay this out. So let's go to batches. And we will create a new batch for November. Generate payslips. We'll just generate it for all of our US-based employees. And we will see that we have five employees. And if we scroll down, Ella didn't have any commissions, but if we scroll down for Finn, for example, we have the commissions that we linked. We also have a link up here directly to the commissions. So these are the individual contributions, not the payment object or whatever. We project through that so you can see a better report. But this is the amount that is going to be added. And obviously, if we go and look at the salary contribution, we have added that as commissions basic here for taxable wage, right? All right. So let's go, before we get to the talks, I want to briefly mention that our module here is really intended to be extended. We have extended it for people, but it does provide a really good base. We're aware that, for example, the OCA has commissions functionality. I believe Odoo has a spreadsheet-based maybe commissions functionality as well. They all work differently, and they all kind of suit different niches, right? If you are a distributor of books or music or something like that, then the OCA's version with the ability to have a per product commissioned agent kind of a thing might make more sense. That said, if you have cutthroat sales agents and they would eat up the ability to tweak their commission and stuff, maybe it doesn't make as much sense, and something more locked down and automated like this one might make a little more sense for you. In any case, we kind of consider it much like Odoo to be vanilla ice cream, where you can add your own sauce and toppings and things like that to achieve the goals that you're trying to get to. And that about wraps it up. So we'll see down here, we've got our QR code for the pad. And I can go to the pad or just take the questions. I'm not sure which we're going to be doing here.
Yeah, I will check what questions we have right
Perfect.
now.
Thank you.
And ask them right away. So thank you for this very nice talk.
Thank you.
For now, I don't know if everyone has access to the pad right now, so don't hesitate to put your questions right now on it. I can see some questions popping up. Let me just wait for the questions to be written.
Sure, of course. Oh, the pads. We're going to watch them be typed.
Yeah,
Yeah.
indeed. So I have here, can you set up a yearly baseline sales level that gets reset at the end of the year?
Sorry, one more time.
Can you set a yearly baseline sales level that gets reset at the end of the year?
Okay, so I'm not entirely sure I understand, but just to make some guesses here, I think we're potentially saying that if somebody sells a certain amount, they get into a new commission percentage or something like that, where the more they sell, the more they make, and thus at the end of the year, if they don't sell or something, it gets reset. Okay,
that's how I understand it.
That's how I understand it. Not out of the box. That's a potentially interesting scenario. I'm sure that we could customize that. Sounds like a scheduled action at the end of the year that just resets everything, and then I guess you index how much you're going to be paying on commission the next year at the start of the year and set it up again.
Thank you. Do you have any possibility to exclude commissions on specific items?
We do indeed. Thank you. That sounds like a plant, but we do. If I forgot about that actually, products. We do have a product excluded functionality here that do excluded from commissions, and you'll note that has an interesting control mechanism to toggle it on and off. I'm assuming that's for permissions reasons, but I can't remember off the top of my head.
Perfect. Is there a possibility for a commission based on turnover generated by the salesperson?
Turnover, like recurring revenue?
I would guess so, but I'm not sure what exactly the person meant. Maybe
Of course.
some
So,
clarification on the question might be added.
if that's where we're going, then of course, because ultimately you're going to invoice that recurring revenue, and thus the salesperson would be on that invoice, and they should be eligible for it if you want them to be.
Okay. For now, I have only starting questions, but not finished. So I will let people maybe write their questions if necessary. Again, thank you for this presentation, Jared.
Thank you. Maybe people could type how many they got right on their predictions.
Okay. For now, that's all I have. I have a question starting. 1 second. Can I configure variation at commission? Let me clarify, maybe. So if the person sells 10 and then I don't have the rest, give me a second. So maybe we can start with another question that got finished just now.
Okay, sure.
Does commissions have impact on the invoice/P&L directly?
I guess it depends on how you set it up, right? Because you have flexibility to be able to choose different sides of the accounting. Most people would not consider it to have impact on P&L until it is paid. So it depends, right? Like it would be balance sheet liability up until it's paid, generally speaking.
Yeah. Okay.
Again, that's very, very configurable, though. I mean, if you want to take it as an expense right away, nothing's preventing you from doing it.
For sure. So the question with the variation at commission got a bit clarified. So like if I sell 10,000, the commission is 3%. If I sell 20,000, then the commission is 5%. So depending on the amount, then the commission increases.
Indeed. Okay. So I don't think we've made a customization like that. I can kind of foresee how you might achieve it, but no, we don't do a lot based on quantity. We try to stick to margin. So a lot of times when people want things like say per category or per product commission or something like that, through discussions with them, most of the time that kind of works around to the idea that they either don't know their margins or they do not want their salespeople or anybody to know their margins, and so they have some issues around the best practices for commissions and need to have special kind of considerations.
The last question I have here is, for trial periods, can you have commissions reversals? Example, customer returns product.
Absolutely, yeah. So the invoicing functionality works for credit memos as well, and I would encourage everybody to use that because if there's some reason, a chargeback or a reversal of any kind, you probably don't want to pay the commission for that for the same reason you wouldn't probably want to pay a commission for something that's not paid.
For sure. Can a salesperson choose under what type he wants the maybe bonus? I don't have the end of the question, but I'm guessing that's what they meant.
For payroll purposes? Clarification?
Maybe.
Maybe.
I would say so. Maybe explain that.
So that's a very interesting question for U.S. payroll, actually. So you can have commissions as what's called like extraordinary income or something like that. That's taxed at a slightly different rate. That said, that is not what we tend to see most in the public. So that's not how we set it up out of the box with our localization. Meaning that if you're making a lot of your money based on commission, it's not a bonus or supplemental. It's your base wage and it needs to be taxed as such.
Great. I think we've got to the end of the questions. Thank you again.
Thank you. Thank you, everybody.